Thank you, Mr. Chairman, and thank you to you and the Vice Chairman for holding this important hearing, because this is, to me, about our economy overall. And I want to start with a company in our state, which was an agriculture shipper, Cold Train. They're located in Quincy, Washington, and they announced that they were suspending their service due to poor BNSF rail performance, decreased on-time reliability, reduction in train services, and nearly doubling in transit times. So from 2013 to 2014, BNSF's on-time shipments dropped to over 90, they went to 90% of on-time to less than 5%. So this is the company. They obviously ship a lot of our apples and cherries and potatoes and carrots in refrigerated containers to the Chicago market, and they were guaranteed a fast delivery time. In fact, they had such a successful business that in 2010, they shipped about 1,000 of those containers, and then they went to 2013 to 7,000 containers. So they obviously were expecting to do more, but with this very poor performance, they basically went out of business and announced that they were basically going to cut off 80 jobs. So that's what's happening to us in the Northwest, so I'm very empathetic to my colleagues from the Dakotas, and clearly this isn't just about a bumper crop. We've seen a huge increase in, obviously, crude production on these rails as well. But you are, Mr. Hamburger, talking about the increase in investment. I think you said something like $26 billion in 2014 and $25 billion in the previous years, but yet this is what's happening. We're losing jobs. So I guess I have a couple of questions for you. First, you are not interested in having, well, I mean, I just want to make sure I understand where the railroads are coming. You're certainly not going to make this about price, right? You're not going to try to decrease the volume or pick customers based on price, are you? You're not going to increase the price just to disqualify customers. You have volume, you have increased volume, so my question is, are you going to raise the price to try to sort out that demand?
Senator, I'm not trying to be non-responsive, but I'm a trade association, but we are covered by the antitrust laws. I really cannot speak about what a member pricing policies are. So I can't really talk about price. It's something that is, I just can't talk about.
That's convenient.
I talk about average prices that we have charged looking back, but what a particular railroad is doing in the marketplace is not something that I have knowledge of or visibility into.
Okay, here's what I'm going to say to that. I don't believe your investment figures are sincere figures when, on the one hand, according to this committee's majority staff report that was issued last November, Class 1 railroads reported an approximately $68 billion in freight revenues.
Yes.
Okay, so you made a lot of money, and I know Mr. Dooley, even though he didn't mention this, had a report earlier this year that showed that the commodity shipper increased their costs from 2005 to 2011, an increase of something like 90%. So you're sitting here telling me I just can't invest fast enough. You're making a ton of money, and what's happening is people are losing their jobs and we can't get products to the market on time, and he's paying a ton more money.
In fact, Senator, you may have been out. He is not paying a ton more money. He's paying 1988 rates. That is way below what he paid in 1981. Yes, they went up. They also went up consistent with the input costs of what it costs us to run the railroad. So the increase is very consistent with what the increase in costs for us are. But it is still only back to 1988 rates. We are investing 40 cents of every dollar, including maintenance, back into the network. And as I also tried to mention, we have some stranded investment where we invested, for example, quadruple tracking going into the Powder River Basin. That cannot be picked up and moved. So, I know one railroad has announced they're spending $400 million in North Dakota alone. That some of that investment, it takes time to put the track in. It takes time to get the employees trained. And it takes.
Chair, I appreciate your answer, but I see Mr. Dooley over there, and I want to give him a shot because I think you're not taking into consideration the rate of inflation in these costs and the costs But the bottom line is, we're losing jobs, and we got product that's not being being delivered in a timely fashion. And the question here is, you're making a lot of money, and we don't see our businesses being protected. So, Mr. Dooley, am I right about that number on the?
Yeah, no, you are, and I would just reference, we have no interest in going back to the pre-Stagger Act days when government regulation created a lot of inefficiencies and higher rates in the rail industry. We don't want to see re-regulation. But when you look at the numbers, when you see the increased consolidation in the rail industry, last major consolidation was in 2001. After that consolidation, when you have 4 rail lines that are controlling 90% of the shipments from 2001 to 2011, and this is very comparable to the own data that AAR puts out, there's been an increase in excess of 90%, 3 times the rate of inflation by rail rates for shippers.